Good afternoon, all. Ira Epstein of Linn Associates with your metals market wrap-up for Wednesday, the 18th of August, 2020, and the time just after about 6:05 p.m. Central Time. You know, I had to stop there for a moment. You didn't see it. Wondering, was today Wednesday or Tuesday? You get all confused when you're home. It's very strange. All right. Interesting day in the metals. First up, I was looking for the metal markets to go back down and hit some key moving averages. The gold did it, the silver just missed it, and the copper market came roaring back to life, saying, hey, I really don't belong in those low 280 numbers, and it's come back to near $3. That's pretty impressive. When we take a look at what's in the stock market, you've made new all-time highs in the S&P, other indices coming along now nicely too. We're looking at energy stable. The API numbers showed about no build, no draw to really speak of, and they're looking on the EIA number to be down about net 1.5 million barrels. We'll see if they get that. Bonds and notes, we saw falling interest rates today, which did not help the dollar index, which fell apart as a big rally ensued in the euro. Now, the problem in those two currencies is they're fighting one, the dollar, the lower Bollinger Band, the euro, the upper one. Did they get stretched enough where those things matter? We'll find out. When we take a look at a weekly chart, the market is at $48 higher at 1985 on the week. That's the week so far. When we go to the daily December chart, and that's the difference, this is the D-Scold, weekly's a continuation chart. You're still in this area, as I want to call it, of caught between this trade top there, this trade bottom. You're about midway in it. The swing line has turned up. You have a pattern, you had this as of yesterday with higher lows and higher highs. So the trend is up. Then I look at where the 18-day average is. The market is over the 18-day average of closes, which is over the 100, and the 100's over the 200. It's a classic bull market setup. If you look at today's break, the market fell back. It rallied first, opened higher, then fell back, and went back up on the close. The market allowed those that play the 18-day average to have a shot at the market there. And so where are we now? Well, at this point with what's on this chart, the swing line is up, the bias is up. Okay, where's the resistance point? That would be the upper Bollinger Band at 2066.30 right now. So if the market in a perfect world were to just rally, I'd look for that to be the first resistance in the market. Support now climbing higher. While the market was down, if you take a look at 1988.60, now the market's got the 18-day average $5 higher than that at 1993.50, and to keep the uptrend going, a couple of things have to continue. Number one, momentum pointing up. Number two, not take out a previous break low. Number three, support that 18-day average. And number four, ideally get up to the profit objectives or the resistance point, depending on how you look at it. In the gold-silver ratio, we continue to see this slipping away, which means silver is technically stronger than gold. You need fewer ounces of silver to get an ounce of gold. The silver was unable to make it back to that 18-day average of closes, but it too has this pattern of higher lows, higher highs. The bias is up since you're over the 18-week average. I'd expect to see support at that 26.48 level. And momentum has flattened out. It's really not pointing up right now. It's sort of drifting right here. In the copper market, you have gone in quick, fast, a very fast move. From the lower Bollinger Band, and I was questioning, why is the market down there? You heard me say that in these tapes. And coming back up in a vertical move, hitting the upper band and running into a buzzsaw there. I don't know what happened there. I'm not pretending I know. I call it Dr. Copper. I'm not the only one. Much of us in the industry does. And as this market goes, so goes the economy. Well, all the economic reports are getting better, not worse, than I'm reading. We have problems with COVID. We know that we have problems with COVID. They haven't been resolved. But we also see, be it Europe, be it America, most areas have done better. Now, they're not galloping ahead. There's a point at which you're into your lockdowns, as I call them. You come out of it, you get the big surge forward, and now here you are in August, you're not surging like that. You're more of a norm. Whatever this new norm is, seems to be how we're looking. When I look at the platinum market, platinum has kept the pattern of higher lows, higher highs. It allowed traders again to, if they wanted the 18-day average to be buyers there, this becomes one of the areas when the trend is up for many traders. I won't tell you where to buy and sell in these videos. The resistance, well, it's above us at the upper Bollinger Band, and what you don't want to take out if you're going to maintain the pattern of higher lows, higher highs, the bias up since you're over the 18-day average and momentum flat is getting under 950, 370. Should you do that, you put in play the possibility of dropping down like that to 915.60. The problem for the bears would be that they'd have, if that happened now, a higher high and a lower low. The only trend that you've got now is the uptrend if you look at the swing line with higher lows, higher highs. In the palladium market, it too now has the pattern of higher lows, higher highs. So today was a good day for the metals. Everything set itself up. Momentum is not pointing and shooting up like it did before. What I hate in the marketplace are the large ranges still in silver. Markets that trade $7,000 a day margin swings up and down, that's very, very dramatic. So dramatic, it has a tendency to keep some of us that don't like risk like that away from markets like that, because part of trading, no matter how good you think you are, what it's going to be about, is it's wonderful if you're on the side of that, but if you go to the bathroom and you come back and it's $3,000 against you, it's called heart attack time for a lot of traders. Many of us with skill levels that go back years, that doesn't mean we're the greatest traders. We avoid a lot of those markets. Let the other heroes have it. I'd rather trade markets that have less volatility than that. In the dollar index, the way that I teach in my charting course, whenever a market gets back to an 18-day average of closes after having been in a downtrend, it's like hitting on a pinball machine, the reset button. You hit tilt, you get there, it's time to hit reset. Well, when you hit the reset button, that means that your Bollinger Band becomes a live support. The resistance is this number because you were under it and you rallied to it. And if you developed an uptrend, well, the resistance could be that upper number. I'm looking at a market that corrected an oversold condition. It had been embedded, then it gets oversold. Now the market hanging here and begins a downwards slope again. So momentum down, trend down, bias down, possible support 92.49.5. The market slid through that, and today's low is lower than that as you added the new data. But you only stay outside of that band 5% of the time. Are we going to accelerate like we did here, which came from a sideways action area, or has the market got enough momentum to just say, no, we're going, and we're going now? We're going to find that out in probably the next 72 hours. So it's going to be an exciting time in that market. As a technician, you are oversold under the Bollinger Band. It's where I think pros come out of the market. But I recognize that in order to get embedded again, you got to get oversold first. And last time we did it by, remember I used that word, gorilla glue. That's what this market did. I'm very aware of it, all over it as a market analyst. You know, when I say all over it in the morning, ask my subscribers if you know any of them. There's quite a few of them. What I mean by that, I throw out so many ideas early in the morning. I got to get the yawn out of my mouth. I get up at about 4, read everything from what's going on in Asia, Europe, have my cup of coffee. Coffee is important. I wake up with it, just like you see there. That's the reason it's there, by the way. And I start giving you what I've seen in those markets. So I'm going to tell you what reports came out where, what's going on. We're going to review together 40 charts on the futures markets. This is not a 5-minute video. The video that I record typically is 20 to 30 minutes long, so you're certainly getting a lot of information. We're going to talk points of entry and exit, profit objectives, stop orders. Risk is everything. Imagine this, you want to be a trader, but you just sit there and let the markets blow you out. You can't make your next trade, can you? You can paper trade till you're blue in the face. Paper trading is very different than real trading. It carries with it none of the emotion of real trading. And emotion has to be part of trading locked away. If you let the emotion take over, doesn't work. You got to be ice cold about your trades. There's nothing wrong with rooting them on. There's everything wrong with trading off the emotion. Do you understand the two? They have to be separated. I cover in this exact detail every day. And for those of you that are saying, I really don't want to see interest rates, I want to get right onto the energies, you just slide a bar on the bottom if you're on our website version, and it plays. That version that we have in our trading platforms, it doesn't work because it only is meant for a website. That overlay just happens on our website where we can add it. I think you'll find it very interesting. And here's the idea there. It's not what I'm thinking. It's what you're thinking, and let's assume that you're looking for that little nudge. Hey, I want to buy the gold. I realize that it's looking good. Where could I come in? Gee, what does Ira say about the market? What are his rules? So you come in. What's the price of doing this? Well, a lot of you drink Starbucks. For 30 days, it's about the price of one of your grandes or whatever they call those monster drinks that they have. After that, it's about 2 of them a month. But you get this every day, including, not a Sunday, including on the weekend. You get a version that is just weekly charts for the longer term trader. Now, if I see something on the longer term, when I'm doing my daily charts like I did today, I will bring in a weekly chart and show you what I'm seeing there. So it gets very fascinating with it. How do you find out and sign up for it? It's all automated for you. Just go to our website under the word research. Read about it there. You can even do a package of the ETF that I put out at 4 in the afternoon, ETF Spider video, and this one. I think you'll find them fascinating. This subscription also entitles you free to join my webinars when I have them. Now, other people that are not my subscribers pay $2.50 to get into that, and seating is limited. Then, if you want to watch my special reports, and I'll be putting out a lot of them this year, the video special reports like I did in gold last week, which thank God it's looking pretty good right now, that's free as well. So help us keep this going, help yourself, give it a try. The worst that happens, you're out $7.95 and you call it a day for 30 months. I'm Ira, thanks for watching, see you tomorrow.